Good afternoon, traders. Welcome to the Moor Analytics Afternoon Energy Podcast for July 6th, going into the 7th. Hope everybody had a great weekend. Okay, we're going to start off with the natural gas. Just as a zoom out here for a second, I believe we are building a bit of a base here, possibly. Kind of hard to tell, but nonetheless, that is a decent possibility. And decent trade above 323.40 minus 0.4 of a tick per hour starting at 6 o'clock p.m. That'll warrant a decent strength. And decent trade above this formation up here, which is going to come in at 334.80 minus 0.1 of a tick per hour starting at 6 o'clock. That'll project this upward 200 ticks minimum, 480 ticks plus maximum, and likely start this in a bull trend. Decent failure below 317.20 plus 0.3 of a tick per hour starting at 6 o'clock p.m. That'll warrant decent pressure for about at least 100 ticks to the downside. If we break below there decently and back up through it decently, look for decent short covering to come in. Okay, crude oil will maintain gap higher tomorrow. Will warn of decent strength. I'm not going to go over all the higher time frame stuff in here, but the trade below 114.35 brought in $47.31 of the pressure warned about. Number of other bearish calls in here. Those are all on hold. Then the trade back above 67.91 here warned of decent strength. And we've seen strength up to 69.24 so far. If we were to fail back down and roll over, I would just be aware of this possible exhaustion area down here at 65.42 to 64.24. That's the final exhaustion on the way down, although it is too premature time-wise for that to hold more than temporarily. Nonetheless, I'd be aware of it. And the RBOB left a medium bullish reversal below on the day that warrants a higher trade for days/weeks. A maintained gap low in there tomorrow will leave a minor bearish reversal above. The trade below 352.26 brought in 76.61 cents of pressure. Number of other bearish calls in here. Then the trade above 278.06 said warrants of decent strength. And we have seen strength up to 302.22 today. We also broke above this formation, above which I said to be long, above 295.76. And we held this next formation and backed off. So that's all the better for the upper formation, which is going to come in at 301.95 minus 2 per hour starting at 6 o'clock p.m. Eastern Standard Time. I would just caution, though, that we may be in the last stretch of this move up from the lows from 275.65 with possible exhaustion at 302.83 to 306.05. Those are just two lines, but it makes an exhaustion area. If we take this line out decently, that's going to put us right up in the middle of that area, but if we start taking that out, it's going to open it up to the upside, and your next exhaustion level is not till up here to 313.55 to 318.76. I would be aware that the 313.55 area also is in conjunction with structural resistance at 312.39 to 313.37. If we were to break above this line decently and back down through it decently, look for decent pressure to come in. That would probably be all the more effective since we would likely be in the last stretch up, and then look for a correction to the downside to the tune of at least 10 cents. In the heating oil, we left a maintained gap higher on the day. A maintained gap lower tomorrow will leave a minor bearish reversal above. In the heating oil, the failure below 393.86 brought in 93.73 cents of pressure. A lot of other bearish calls in here. Those are all on hold. Then I said the trade above 320.04 projects this upward 6.75 cents minimum, 25 cents plus maximum. We've now gone on to trade up to 331.97. I also said to get long above 327.77, minus 9 ticks per hour. Like I said, we've traded up to here. Decent failure back below this line, which is going to come in at 326.91. Minus 9 per hour starting at 6 o'clock p.m. That'll warrant decent pressure. And in Brent, a maintained gap higher tomorrow will leave a minor bullish reversal below. The trade below 113.13 brought in 42.99 cents of pressure. A lot of other bearish calls in here. I did say I would note that the final 69.38 to 67.88 general area is a final area of possible exhaustion on the downside for a correction against the move up from 58.83. If we hold this and build a new bull structure, it could be significant, lasting weeks, months. Gas oil, we left a medium bullish reversal below a couple days ago and an even larger bullish reversal today. A maintained gap lower tomorrow will leave a minor bearish reversal above that would likely bring in pressure for days/weeks. The trade below 1340.75 brought in 488.25 of the pressure warned about. A lot of other bearish calls in here. Those are all on hold. Then the break above 896.59 has brought in strength up to 950.75. A number of other bullish calls in here as well. Take out this line decently. That's going to warrant a decent strength. That's going to come in at 944.56. Minus 26 per hour starting at 8 o'clock p.m. Eastern Standard Time. I would also warn at the same time that we may be in the last stretch of this move up from the lows at 841 with possible exhaustion at 950.26 to 953.85 and then 965.75 and then above that 991 to 1010.25. However, if we take both of these lines out, those will both warrant strength. So we're going to see one way or the other. If we break above this line decently and back down through it decently, that would warn of decent pressure, and that would also line up with it being in the last leg up and then for a bearish correction. And I would note that the cadence going into tomorrow is the heating oil is the strongest of the three, the RBOB in the middle, and the crude the weakest of the three relative to one another. Okay, thank you for watching, and I'll see you on tomorrow's podcast.